welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. All right, Nick Santiago, President and CEO in themoneystocks.com with me now. Nick, what's going on with you and the markets?
Hey, Michael. Great to be back. These are wild markets. Right now, we're looking for a turning point. We're looking for a little bit of a turning point. So we'll see if that does occur shortly.
Okay, let's start off with the underlyings like, Apple and so on, and then we'll get into the big indexes in a second, okay?
All right. Right now, I wanted to bring up Apple today simply because the stock has been behaving pretty well, but I don't think traders should get too excited. This stock right now could trade up to around the 446, 447 level, and that's where the stock should hit a wall of resistance. So as I've said on your show many times, Apple right now is just a short-term trading vehicle. It's not an investment any longer, and it's going to come up into its high end of the range right around that 440, 445 level. So I think traders should not get too excited about Apple. I've been receiving a lot of emails. Hey, is Apple a stock to get into now for the long term? And the answer is no.
Okay, all right. Are you going to be trading that one in the trading room?
We will be trading that one in the trading room. We're going to probably be looking for a short around the 446 level.
Got it. All right, the next one you had on the list, what did you want to talk about?
Well, I had the U.S. dollar index on the list, and I know there's a lot of chatter out of the central banks these days, but either way you slice it or dice it, the dollar sold off pretty nicely on July 10th. And right now, basically what it's doing is it's just starting to make a little bit of a bearish consolidation pattern. So we ultimately feel that the dollar should go down to the 81 level. As the dollar gets down there, that should weaken the stock market, the S&P 500, and that should also hurt the dollar-yen chart. So traders should be aware of that, even though the markets are up a little bit today and everybody's rejoicing and the media is playing new highs. These markets are at a vulnerable state at the moment.
Okay, so you're looking at them to be just a tad overbought, a little bit more irrational exuberance than this should happen if it's going to continue.
Well, right now, I think overall, when you look at the dollar, it's been a very good barometer for us. These days, when the dollar is strong, it's beneficial to the stock market. When the dollar is weak, it's a negative for the stock market, and the dollar looks kind of weak to me right now.
Give me a resistance level on this dollar. We got just barely a little bit upward bias today, so you got to look for a top somewhere.
I'm not even sure the dollar is going to get above 83.50 in the near term. I mean, when it gets down to around 81, that'll be a good support level, but right now it's just putting in bearish consolidation. If you take a look at the July 16th sell-off bar, and basically just consolidating inside that big red down day, and that should lead to further downside.
Okay. All right. You mentioned down around the 81. You think it's going to hold support there, or this is the part where it really gets out of hand?
Well, I think it'll test 81 and it'll hold it at least temporarily. Okay. If it doesn't hold there, then that's a real big negative. But I'm expecting the dollar to hold there, and then we'd have to look at pattern.
Okay, sounds good. JJC?
Yeah, JJC is copper ETN, and basically this here really is not showing us much strength at all. Right now it's just chopping around sideways. You do have some lower highs, so that's a little bit beneficial. But this gets to around $40, maybe $40.50. You can short the JJC.
Okay. All right. Overall bearish. Got it. Sherwin-Williams, SHW?
Yeah, I wanted to bring up Sherwin-Williams today because this is a large paint company, and as you know, the housing market has really been everything. That's all that people talk about is the housing market, and Sherwin-Williams has a large part to do with that. If you notice, the stock topped out recently. You can make a case in the month of mid-May. So this is a definite negative. You can just see the sell-off in this stock today. It's down over 15 points, roughly about 9%. This is a negative, and I think people are just too complacent out there in the world right now, thinking that, hey, the central bank money is going to keep everything afloat. Housing is recovering. They don't realize that you got to watch leaders like Sherwin-Williams. They're going to tell you what's going on, even though it's not a high-volume stock generally. It's a stock that's a good market barometer, and right now you got a nice lower high and a big sell-off day. So I think traders now need to get their caution suit on when you're looking at these overall stock markets, and Sherwin-Williams is telling us that.
Yeah, well, it's not only a big sell-off day. This thing gapped below the last established low there at the end of last month, and it's still below it. So what happened? Did everybody decide, no, we're not going to build, we're not going to buy any more paint from you guys? It just looks horrible.
It's a huge decline. It's a decline that traders should take notice of, and not only for the stock, because I'll be trading this stock. I've traded it many times. I'll be trading this stock around 147. I'll be buying it around 132. But at this stage of the game, this is a warning sign to tell people, hey, these overall stock market indexes that are getting these Bernanke bounces left and right, hey, there's trouble out here, these are what I like to look for. I like to look at market leaders that are falling off the board, and that gives me a heads up of what's going on in the stock market.
Okay, well then let me put it to you this way. Could this be the preemptive, almost fractal look at what we could be seeing next week with the stock market, this big gap down?
Absolutely.
Okay, I wanted to bring that out. All right, on that point, let's look at another market leader that you woke us up to a while ago, J.P. Morgan, and that banking index is flying. The stock is breaking out over new highs. Is this kind of the fake out move that we could be sucking in some of the late comers to the market just so that they get hammered next week?
Well, I have a tendency to think that's a possibility, and the reason why I say that is that the stock is just so extended at this stage of the game. If you take a look at a monthly chart of J.P. Morgan from June 2012, you're going to see that the pullbacks have been so minuscule. I think we've only had 3 red bars or 3 down bars in the entire move in a year. So, when you see indexes like this, and I'm not saying these banks shouldn't go up because they're getting free money and, they're inflating them left and right. But the truth of the matter is they're very extended and very overbought. And, everybody sees these bank stocks and they become, wow, the banks are just, flying off the charts. But the truth of the matter is, they get unlimited funds, and that's the reality of it. As a chartist, they're very overbought. I would not touch a single bank stock at these levels.
But on the fundamental side, is that easy money going to stop anytime soon?
Well, you have to look at it at this way. The easy money has been made. Now, if you want to jump in, or somebody wants to jump in on J.P. Morgan at 56, meanwhile a year ago it was trading at 29, be my guest. But you will never see me jump in it at all up here. I'm looking to short these things.
At what price do you think they would be a better buy than where they are now?
J.P. Morgan, around 40, 43.
Okay, that's a pretty big move on a pullback.
That's right. That's a huge move. And, that's potentially, you get any kind of major correction where this stock can go.
Okay. So at that point, do you think we're going to see major money sitter banks come back in and buy more of these? Because they're the people that have all the money right now. Do you see that we're going to have more money come back into the market should we get a decent-sized correction, whether it's in the financials or it's just the overall market pulling back?
Well, I think that 2013 ultimately is a bullish year. So I do believe that, the mindset of the institutions that move the market is to buy the dip and is to buy the main correction. So, I do think you'll get an opportunity to own this a lot lower. And, I would just be a trader at this stage of the game, though. I mean, I hear people talking about J.P. Morgan making another 100% move from here. That's insane.
Well, I mean, it's not improbable the way everything's set up. But let's move on for a second. I want to cover another sector, the NASDAQ, QQQ. What are you thinking about that one? That one did the same thing.
Don't touch the NASDAQ right now. Don't touch it. Let this NASDAQ need to sell off. We're into a critical level. I just gave a level to my members 2 days ago about the NASDAQ to watch for a reversal in the NASDAQ composite. Do not touch the NASDAQ at this stage of the game. In fact, today, the markets are coming back in as we speak, but just today, you have the NASDAQ 100 negative. Meanwhile, the Dow was up at over 100 points. The NASDAQ is poised for a major correction as well. Okay.
When you say that, give me some idea on the pullback where you think it may go to. I know we still have to stop going up before it goes down, but...
Absolutely, yeah. So it's a little bit, tough there, but first pit stop would be around 33.50. And then ultimately around 3,100. And 3,100 is a level where I would be a buyer of the NASDAQ.
Okay. All right.
And that's the composite.
Talk to me real quick, because I think we got about a minute left. Any good trades in the trading room today?
Yeah, we had a few good trades. We had a couple of Tesoro scalps. This week alone, Michael, we hit a Tesla a couple days ago on a swing trade. We nailed it right at 133, and we covered the trade right around 114. It was just a huge gain in one single day.
Wow.
24-hour trade. So, I tell everybody, come take a 7-day free trial to the intraday stock chat. You'll see our desktops live, or come over to the research center, and you'll get all of our nightly setups.
All right, perfect. Thanks so much, Nick.
Thank you, Michael. Have a great day.
You too, everybody. That's Nick Santiago, President, CEO in the Money Stocks. Up next, we're going to come back with Dina Miller.